This is general advice, my opinions, and for entertainment purposes only. CFDs are high risk, past performance isn't reliable. I may be long or short CFDs and stocks mentioned. Content may contain language that offends some viewers. Righto, punters. First fundy chat on LEVRD. Who else would you pick in this time? You're probably the richest bloke in Australia at the moment, Headers. All that pain you went through punting on these small caps while they were dying in the arse has come to fruition. Hedley Widdup, Lion Selection Group. Welcome to LEVRD, Cobber.
Oh, g'day, Matty. Thanks for having me, and thank you for inviting me on. I didn't realise I was the first fundy chat, so I'm absolutely flattered.
Very good. I think everyone's sick of me talking to myself, so you're in high demand. Mate, and to your credit, even when small caps weren't moving, you were still just as happy then, but you look a bit happier now, mate. Where is the clock? The clock. I seen a late update in December about where you thought the clock was at about 5 or 6, but fuck me, a lot has changed since then. I'm pretty sure gold's up 10% or more since then. Yep. Surely. I'll show the picture of the clock for everyone. It is essentially Headers' gauge on where the market is. So, mate, clock update, please.
So the clock, as you say, Matty, it's just a depiction of the mining cycle, and the cycle goes around and around and around and around. It repeats itself. And you don't want to be buying just before the market's about to go down, and you really want to be buying when the market's set to rip. So that's what we're watching for. We tend to align the big updates on that to our AGM. Makes a lot of sense to tell it to our shareholders. So that was on the 27th of November last year. We updated the clock, and we said we're going through 6, which is 6 is where you go from it was a bust and it's now the early days of a boom. As you say, mate, I mean, gold is up a hell of a lot since then. In fact, on that day, I think the gold price was about 41.57, and looking at my screen now,
so
it's like,
low. That sounds so low.
Something. Yeah, I know. It seems like it was so 2025.
Oh yeah, so 55.70 or something today. 55.70 US.
We're up about 33% since then. That was the end of November, right? And we're only just at the end of January. So 2 months ago. And that feels surreal. But I suppose to circle back, I don't think that can happen when you're in a bust, even if it's a bust which is about to end. I think that happens because you are in a boom. Now, I guess the question is how far into it, and are we progressing a little bit too quickly into it? And I don't know the answer to that. These things go up and down pretty sharply, and I expect that gold's going to have some big ups and some pullbacks, but on an upwards trajectory. So we're in a boom, and I still think it's early. But is it 6? Is it 7? I don't think it's 8. We're in the early stages. 6, 7. If my daughter saw this,
the kids are going to like, hey, Chloe, 6, 7. We just did a 6, 7 on camera.
6, 7.
It's 6. Tell Frankie to come in and do one too. They wanted to get on camera. Oh, it's so good.
Are we being a bit skibbity here, or am I just starting to misuse stuff I don't know anything about?
So good. Mate, what are you all, have you ventured much out of gold yet? Or are you still just punting gold? Hey, Franks, you want to do a 6, 7? We're just 7.
Come on in.
Chloe, get out of here. Chloe doesn't have a shirt on. She's a girl. God, bloody.
6, 7.
Righto, get out of here.
You get prosecuted for that.
Get out of here.
I reckon we've put half, 60%, maybe 70% of the money we've ever invested in Lion's almost 30-year history into gold things, because gold is easy to do. But we strive for diversity, and that might be across names and introducing some commodity diversity. The thing is, do you want to diversify away from a commodity which it's much, much easier to develop projects in? And that's ultimately going to be where we get our value from the uplift to being a cash flowing producer or getting taken over. Then there's the argument of in an environment like this where gold has ripped so hard. I mean, it's doubled since we were putting our first positions in fact, more than that. Do we need some diversity in other commodities? So there's a yes and there's a no there. We've got some base metals play. We've got some rare earth play in there. And we've got an iron ore play. They're all probably at the earlier end. we're still overwhelmingly gold exposed, and looking at something at the moment which will bring in direct copper exposure as well. So, if we had 11 or 12 exposures in our portfolio, there's probably 6 or 7 of them are gold dominant.
You can see why that 6-7 took off, because you said every time it's 6 or 7 of them, 60 or 70% in gold. It's 6, everything's 6-7. Mate, before we get into the stocks, we're going to talk about we've got a few joint holdings between us. We've got some that you own that I don't own, and I own that you don't own. We're going to go through bloody Brightstar, Medallion, Saturn, Antipa, Great Boulder, Torque, Gorilla, New Murchison, Rocks, mate. We've got a bit of a thing going on here. But before we get into that, the punters that have been watching me go on probably a 3-week journey of learning about put options as downside protection, I am interested to know what a fund like yourself, Headers, which, long only. Yes, that's correct, isn't it?
Correct. Yep.
Long only, big exposure. Other people's money you're punting, which I am not. So you get a lot. If you lose it, people are going to want to lynch you, and possibly worse. How do you look at downside protection when gold is so toppy at the moment? We don't know where the top is, but it's toppy.
Yeah. This might get me lynched. We have never engaged any downside protection across the portfolio. I suppose there's things you could do. We could be investing in puts to engineer an exit, or to synthetically create a value that comes in if the market falls. When we've looked at those strategies, and we've looked at those strategies even when we're going through an M&A exit, for example, small company being taken over by a big company, we don't want to hold that stock long term. We know we'd like to sell it, but we're trying to protect ourselves against a price fall of the big company. And we've looked at the cost equation of going through all of that. More often than not, we've decided that we're bringing so much more financial complexity into our business that we don't want to have to manage, that we've stayed away from it. And I suppose there's not a great deal of experience in our team of dealing with puts and options and things like that.
I'll look happy to help when you need me to, Headers.
Yeah, we might have to get you on as an advisor. The way I'd round that off is, the core investment strategy, which a lot of people have, will differ. So, some people's core investment strategy is to take advantage of fast-moving prices. Others have a longer-term value outcome in mind, and that probably incorporates something becoming more valuable from commodity price going up, a stock de-risking, becoming more valuable as a producer, you name it. So I suppose what's closest to our value delivery is seeing something through the long term. And those option strategies have just never worked for us to be able to protect us over such a long period of time. And when we've looked at it, the expense could really add up and up and up. Now, that's not to say it doesn't work, because I think for an investor in your position, it makes a lot more sense, particularly given that you're managing those positions yourself and, watching for volatility and things like that.
And leveraged.
Well, and look, we're doing very similar things in a very similar space, but in two very different ways. So I'd say that's probably why we haven't. But
and a lot of the stuff you've always punted on baggers, like you're in early, you're in the early raises, you're cornerstoning a lot of these cap raises at low prices and aiming for 3, 4, 10 times returns, which I assume amplifies any potential losses in a downturn, and it just win-win, hopefully.
One of our bigger positions, and rather than call out a name, because I don't want to emphasize their performance versus others, but there's a stock in our portfolio. I think our average entry price is about 20 something cents, and they're trading in the 80s. So it's a 4-bagger for the company at the moment. But when you think about that from a downside protection, our loss of capital starts to occur in that one at 20 cents.
Yeah.
And we're up at 80. So, I suppose if we felt that was going to start to move in a negative direction, we've got time to assess the news, determine what to do very quickly, and then to act if the market started to turn against us. So, would we like to do that through puts, or would we just like to try and be fleet of foot? I think we're probably backing ourselves to watch for the events that would result in permanent loss of that value. So we, like you say, by investing early, we think we're protecting ourselves against some of the downside there as well.
Yeah, you get the best price because you never. It rarely when the cap raise the price you get in the cap raise, it's pretty hard to get that on market after. It might get close, sometimes it does, but not in this market. It's not, mate. Yeah. Speaking of cap raises, let's get into the stocks. This is a common holding. I've got a feeling it might be your biggest one too, and it definitely will be after you. We'll find out if you're tipping into this cap raise.
Which one are you talking about, Matty?
Love it. Love it. Plenty of news out of Brightstar this morning. Trading halt, cap raise, DFS update for the goldfields. I'll bring it up on screen. 1 billion pre-tax free cash, 1.4 billion pre-tax free cash flow at current spot price of 7,000, which is up again. 180 mil pre-production cover. Mate, do you see how tuned in I am? This is just off the top of my head. Don't you worry about this, Ed, as I'm living and breathing this shit these days.
I'm going to call you numbers from now on, mate. You just got them all.
Of an unassuming character, mate. So that's coming out, raising $150 at 50 cents. You tip it in, Edders, again?
We haven't crossed that bridge yet, Matty. So
can you talk about that sort of shit on this until you do it or not?
Well, look, we've invested.
If you're tipping in or not, because I'll stop asking you otherwise.
Yeah, no, that's all right. We've invested 10.8 in Brightstar to date. That's 10.8 million, and I think we're sitting. We're up about 50-60% on that at the moment. So the holding's worth about $17-18 million to us at the moment. To say that we're happy with that performance, I don't need to. We are very happy with it. We've always felt, and I think that Alex would feel exactly the same, that their early strategy has had to evolve. There was a fair bit of complexity in the way that they went down the path of doing. So would we tip in again? We're very close to our portfolio limit on that one. I think notionally 10% of our portfolio is where we cut it. That's about $11 million. So we could invest 200 grand before we need to start creating exceptions. Yeah. So I'm inclined to say that we probably won't be tipping into this one, but we are extraordinarily happy holders. And part of the reason that we're very happy about this event as well is that Brightstar has been doing a great job with some assets which look interesting but require hard work. And I think much of the market has sat back and said, well, all right, you've got this sandstone position. That's years into the future. You've got stuff around Laverton, but at the moment you're selling parcels of ore. It's difficult to reconcile what your quarterly cash flows are. It might be high-grade ore, but Jesus, it was hard to say whether you're making money or losing money. And then you've got Menzies, which you might sell, you might develop under a similar sort of, throw some contractors at it and see what happens. So this is, this takes them to an ultra simplification. It's just like build a mill, put everything through it, and all of a sudden you're in business for, 7 years, it's 75,000 ounces per annum, something like that. And it's very profitable as well. So, it takes them from giving away margins to toll treatment facilities to owning all of that margin. And Alex, to his great credit, this is an Energizer bunny, which never, ever, ever gives up. And he can see the dream. He's got the strategy very, very clearly in mind and adjusts for criticisms that he gets. I think probably there's a lot of people in the market that provide criticism a lot more directly than we do. But, I'm acutely aware of some of the things he's been told are fucked about his business, and he's taken that to heart and fixed them. So, 150 mil coming in the door. I think the whispers around the streets are that was 8 groups, had that amount spoken for already. So
that's might even get upsized, eh?
That's a massive stamp of approval.
Yeah. Look, I've talked about it on my show, mate. I've went on a site visit out to Laverton with them, and the thing that impresses me compared to the other companies is, like they might be fucking around with Second Fortune and Fish, and they mightn't be making heaps of money out of it. Like it might be cash neutral business. But he's built a business. There's 150 people working there. Yeah. They've got the systems, processes, the culture in place. Culture I was very impressed with. He integrates with the workforce and the vibe on site. I can, after being on sites for 15 years, when there's a good culture and a shit culture. So the step change of now building a mill and mining open pits, which in this market open pits are just fucking easier than underground because underground is getting too expensive, and the people that are making free cash, like your new Murchisons, who don't even have their own mill, it's from open pits.
Yeah.
Fair that they've got a shitload higher grade. So turning on Lord Byron, Lady Shenton, sending the Menzies dirt over to their own mill. This is what the market and myself have been waiting for, the overhang of the cum raise. I think I've been spelling cum raise wrong, the cum bit. But I don't know. Is it C-O-M-E? Is that how you...
No, it's C-U-M.
It is C-U-M. I thought it was.
Yep.
Anyway,
I think it's Latin.
Like cumulative raise or something. Fuck, I don't know. But this is, and obviously there's a debt piece incoming as well. I would assume to complement this. But this is that pulling together that sandstone stuff is fucking done it cheap. Like the Alkane Gateway stuff. Doesn't really need horizon. It's nice to have, not a must-have. It's probably, I think it's a bit more refractory the more north you go. The sandstone stuff's down the bottoms, more free milling.
Horizon's up in the Gidgee, and I mean, what Brightstar now have is 100% near on of the sandstone belt, which is a geological area all on its own. There's been 4 million ounces produced from there. And I mean, that's not in the top 50 metres, but it's mostly in the top 50 metres. So you can imagine, I mean, if there was 4 million ounces mineable within that tiny little sliver of dirt that exists at the surface, that place is absolutely loaded. That's a wonderful manifestation of ounces and gold mineralisation. It's so prospective. And they already have like 2.5 million ounces there. So what's that going to be when they finish? And, his geological team's amazing. So I actually can't, I mean, we're talking each other's book here, aren't we, Matty? But I can't think of anything else in the gold space which is small producer with enormous growth asset. So it's got all the different types of tension that you want in one of those things because, they've got an asset which is the size that belongs in a major's portfolio, a mid-tier's portfolio. Yeah. So Brightstar either become the mid-tier or get sucked into one. And, it's great for shareholders.
Yeah. Oh, I'm surprised there hasn't been. I'm sure there's been talk and dealings in the background for companies like Brightstar and everything. But, like, relatively to the script value of some of these mid-cap majors at the moment, like your fucking Genesis, Capricorn, Westgold, all the like. You look at your Brightstar, like Brightstar's what, fucking it was 420 mil market cap. I'm sure that'll all change on an EV basis after this cap raise. It's like they're saying everything's pricey and it's hard to do deals, but their scripts valued so friggin' high. I'm just surprised there hasn't been more action. Everyone's still trying to get everyone cheap instead of securing future growth like this.
Well, maybe that's the biggest signal about where we are in a cycle, Matty, that there's still a lot of hesitation and sensibleness around. Hasn't had time to manifest as, prices are here to stay, people are making money, bigger is better. So, I think if you're an asset which is partially developed, and that's what Brightstar is, you're ideally poised for this time in the market. And to take risk out of your price by pulling so much money in, the funding risk just evaporates in my mind. And it has a very, very, very sort of clear smell to it to me of last money in, which is what Instos are most concerned about. You don't want to be anything other than last money in for those guys because it's all de-risked from there. So assuming they get some debt, and I think, they've taken care of most of their funding capacity there, you bring in some debt and you're exceptionally well funded, which just soothes the nerves of everybody. So, what'd you say, 400 mil before plus 150 raised probably equals 900 in the aftermarket. So let's keep our fingers crossed.
Yeah, yeah. And I think mill costs at the moment, from what I'm hearing, like there's so many mills to be built in just WA alone. Like, fuck, between you got Brightstar, you got Genesis Leonora, you got King of the Hill upgrades, you got Orabanda, you got Capricorn Mount Gibson, you got Emerald at Dingo Range. Fucking, I've probably missed more. And by the sounds of the pricing, I think they're like, everyone's like, how's he going to fucking build a project for 180 million? But I think there's a lot of like redundancy protection for the quotes that they're getting for these mills. So I don't see like mill costs blowing out like they used to. I'm not like, and you obviously got KCGM being built at the moment.
It's not like
I think it's getting a bit
competing
more competitive because there's so many of them to build.
Yeah, and it's not like they're competing against nickel developments, lithium developments, copper developments, iron ore developments either. So, and different gear, but the contributing cost to a lot of those things is just steel demand and everything else. So it's not actually a bad market to be pulling a new piece of infrastructure together in.
Yeah. So that should be trading Friday. That said Monday, so it'd be Friday or Monday, I assume. So, nice. Well done on that one, Headers. Next up, I might tag team you. One for each. What else? What other hats have you got with you?
I just grabbed this one because I knew you'd be wearing a hat, and I thought I'd better grab one. And
I'm really supporting.
I think you'll want to talk about this, so I'll be able to put it on. But no, I don't have any more hats here.
What's a bloody weird? So new Murchison. We'll go to that. I'll go a bit all over the shop here, but here's an example. Far out that like these new Murchison's printed more money than most other big mining producers this quarter. Printed 70 million, and that is with no mill. Helps when you got a 3 or 4 gram open pit. Westgold are obviously making a fortune out of that OPA as well, and that is just. That's nearly $1 billion company now. Is that one? Did you miss the boat on that one, Headers, or not?
We looked at it at the same time as we were sort of growing our position in Brightstar. And one of the things that we, I suppose, thought about as a risk from a risk perspective there was how many companies do we want to be invested in that are reliant on someone else's process facility? And can you rely on that turning into M&A tension or anything like that? Because, at the end of the day, if you're processing their ore, you might have your sights on them as well. So we saw that. We loved the grade. We'd already done Brightstar, and we were sort of thinking, well, this one doesn't have a huge inventory, and that was before they'd hit some of the deeper stuff. I suppose you could say we missed the boat there. But I think, there's a lot of things I look at in the market at the moment, and perhaps there's an element of this. I wouldn't say this is a runaway on New Murchison, but there's the things which have gone from we're not producing and we're risky and everybody's just waiting to the things which are producing and they've de-risked. And, in this case, I think their revenue line was $111 million or something, which is just remarkable to go from zero to that. They've come from nowhere, and that's attracted a big squeeze in there. So, there's probably a bit of value to backfill in quite a few of the gold stories that have adjusted into that space. And a lot of them have got commissioning issues. You don't have to worry about commissioning when you don't own a mill. And whilst the IPA is it's leaking value to somebody else, it's got them into business so fast. They now have the world as their oyster in the Murchison, where Westgold doesn't appear to want to be a consolidator, but it sort of leaves the space open for somebody else to be a consolidator. So there's New Murchison showing they know how to do business, and they'll probably be able to fund themselves to be masters of their own destiny if that, if they find themselves with enough ore to do that as well. So full respect to them, but it's a stock I would have liked to have held. That was the reason why we didn't.
Yeah, I think it surprised everyone, to be honest, because of, it was just like there's going to be this 1 to 2 year sort of thing. But then obviously the money they're making, they've got some good exploration prospects for undergrounds and stuff. Like, I know there's, water courses around there, like mightn't be, this is the cream they got at the moment. But what, can you put your finger on why you think Westgold, once all the Karora stuff went through, why they haven't been a bit more active in that region, considering they obviously need the dirt because they're taking overs on the OPA from New Murchison, so they need to fill the Bluebird mill, like Big Bell. I know they're going to go around the fringes there and sort of, which they probably make easy money on, and just sort of re-blast the edges of the cave like they did at Mount Charlotte. It just strikes me weird that there hasn't been more activity in the Murchison for consolidation. Can you put your finger on it?
It's an area where, they were active, weren't they?
Besides Ramelius and fucking Spartan, obviously.
But, Well, go back prior to Spartan. Ramelius ended up pipping Westgold at the post for Musgrave, which was, it was a very attractive small project, open pit starter and then an underground to follow. So they obviously were acquisitively minded. They made a big deal with Karora, and I think they had a hell of a lot of digestion to come off the back of that, including, there was a fair bit of capex that seemed to creep up on them that they hadn't detected along the way, which, is not actually abnormal in an acquisition. I don't think there's anybody that buys something and then goes, holy shit, they've spent all the money. What do we do now? Just make money. So you've got to suspect that comes along. I have heard people say, I haven't heard it directly, that Westgold has said they only want to be an underground miner, and they've gone as far as spinning out what otherwise it might have been attractive open pit satellite feeds for some of their process plants, maybe too far a truck or something like that, but spinning it out or looking to sell it.
Yeah.
That strikes me as unusual, because I don't know if I'd want to wed myself to any one form of mining if I was that large of a company.
Especially when it costs more. Like, if you can mine pits easy and cheaper. Like,
if you're the best underground miner in the world, go for it. But I don't know if, that moniker would be pretty hard to come by. And if you're the best underground miner in the world, you're probably doing that by a margin of 2% or 3%. It's not like you're the Stephen Bradbury that beats everybody by a lap because they all fell over. Yeah. There's a lot of good underground miners around, a lot of good open pit miners around it. It comes down to the projects that you happen to own. So, yeah, I would have thought geographical consolidation and control in a region, and not letting anybody else come in under your skirts would be pretty important. So I'm a bit puzzled about that, to tell you the truth, because it's that corner of the Murchison has got a few operators which have inventories which you'd think would be very sensible accretions. So for them still to be sitting there, makes me wonder if that's a real strategy, just a spoken strategy, or if there's something else deeper down that has caused them to be on that pathway, like a shareholder who said, right, we've really got to shoot this out of the park if we've got this much belief in ourselves before we single other thing.
Yeah, I think before we get on the next, because my view of pits at the moment is because the prices run that high, and I compare the likes of Brightstar, for instance, to Emerald or just anyone, like the 1.5 grams compared to 1 grams now, that 50% increase in grade that you can get from pits, the extra cash you can generate from open pits, and New Murchison have been the example to show how much money you can generate from open pits so quickly and so easily compared to underground mines. Like look at Orabanda, for instance. Like Orabanda they added 30 mil, I think, to the balance sheet. Like Pantoro, they didn't add much. And this is they're unhedged. And whereas the open pit, so why to wedge yourself to be an underground miner in this market? I just think open pits is where the cream is. The whole excuse of all the easy stuff's been found and everything's going underground is a load of shit, because the amount of 1 gram dirt that is sitting around that has never been looked at before in history is phenomenal. It's fucking everywhere. So
the cut-off grade that you can employ for an open pit now is bringing into inventory things which were never, ever, ever considered to be economic at all. But
Volta mining 0.5 gram at King of the Hills.
Yeah.
So is Regis.
If you have a big open pit which has, somewhere between 0.2 and 0.4, which is marginal 6 months ago, or on the 27th of November last year, for example, but all of a sudden you've just introduced phenomenal flexibility into your business, because that, whether it's a low-grade stockpile or whether it's feed tomorrow, it'll probably find its way through your mill. And if you're having down days, if you're having some problems in the pit or anything else, you've got that stuff which you can process and still be making revenue. Whereas the undergrounds, and we've seen some pretty problematic ramp-ups of those, we can see that access to ore, the ability to not dilute and bring high grades out of the ground is probably one of the biggest confounding factors, and it really is expensive to get it right.
Yeah. Right, next stock, mate, run by an absolute fucking ripping bloke. I like it when a good bloke runs a company. They're just a good GC. Straight shooter, Paul Bennett, Medallion. This is a bundle Brightstar, these ones together, sort of your Brightstar, your Rocks, and your Medallion, the ones that are sort of like Brightstar's taken a big leap today, and I think Medallions they've done their cap raise, they're very, very close to having nearly everything sorted for the Cosmic Boy deal, consolidating getting access to IGO's concentrator to send up the shit from Ravensthorpe so they can float the copper out. It's got a tiny bit of copper exposure, but it is a gold project down in Ravensthorpe, mate. They were in the doldrums with no money for fucking ages. Complex shareholder base, obviously, with the Chinese founding shareholders. You're a holder. It's one of the next development projects to come up in WA, albeit not huge, but it looks on the right path with just some permitting milestones to sort of come through, which should be through pretty imminently, I would hope, if everything goes to plan. Give us the bloody medallion take. Geez, Paul Bennett, you owe me a beer after talking you up that much as the best bloke ever. Far out.
He is a good bloke.
Straight shooter, but
comes from a forestry family in Western Victoria too, so it's not like he's got mining in his blood or anything. Come through the Ballarat School of Mines, very well schooled there, and he just seems impervious to which way the herd is going, and just forms conviction in his strategy, and off he goes and executes. And just to put a bit of detail to the story you just told, if you go back 2 years, they were a company which was probably scraping 15 mil market cap. I mean, their last two raises, they raised more than 15 mil just in a go. At that point, they had a good inventory. They knew they had a project there. The issue was, from a 15 mil market cap, even with a good gold price, how do you build all the infrastructure you need to be able to process all of that? And then the deal came along to buy someone else's nickel plant from a big company that was, can I say, going broke? Maybe IGO wasn't going broke, but their nickel projects were going nowhere. What a brilliant deal. There's trucking involved, but it simultaneously unlocks the other part of the revenue in your ore, which is the small amount of copper, which can be a pain in the ass, and all of a sudden it's bloody brilliant. So they're on that trajectory of de-risking now. And what I don't know, one of the things that I love about it is you've got Ravy coming up the road. There's already plenty of metal there. You've got a plant that you've bought from IGO, and somewhere along the way, they've convinced IGO to throw in all of the exploration tenure as well. So something that was explored for 20 years as a nickel project, you need to collect a lot of data for nickel. There must be some gold in there. In fact, I dare say there'd be plenty of gold in there, because it was a gold belt before it was a nickel belt. It's just that it's been forgotten about as a gold belt. So, do you need much gold to add serious value to that? You add a year's production to that, and that's, it's probably $250 million worth of market cap that you could find just by doing that. So come from nowhere, they could be a consolidator too, I dare say, and they're obviously very familiar with transacting, and got superb support in the market. I did think they had quite an unusual register. As you go through the names there, there's some that sound like Chinese entities, but I think one of them's Junkie, and the other one's a guy called Darren Hedley, which is a spectacularly good name, but definitely not Asian. So because one of the entities there, I can't remember which one it was. We were debating, are these all, there are some offshore shareholders, but that's a group of people. There's 4 or 5 of them. They've been investing together for 20 years. Yep. They've developed things in the Pilbara. So there's some fantastic entrepreneurialism out of that as well. And, it's one of those projects which you could bolt onto somebody else. It'd be a really nice, profitable business unit. With a register like that, I don't think you need to live in fear, because, anyone who wants to convince the company that they should do something really needs to pay for it. So I don't think it's on the horizon, but geez, it's got some re-rating to do if that becomes a minor.
I think it might be just one of those cases where you're unsure if the tail wags the dog when you've got such a big holding with five key shareholders, and you sort of just want an inkling what's their intentions, what do they want to do, like consolidating wise, like you've got Mount Holland gold rights, you've got TG6, I think they got a bit of bloody gold around there, like there's a lot in that region that is.
Well, you've even got Southern Cross, and going north of there, and there's a Golden Horse. Nick Anderson would love a mention.
That Emerald? Emerald's the major shareholder of that, aren't they? Is that the one that come out of Emerald? Yeah.
They are. So there's quite a bit of growing inventory. Some of them are small, some of them are scattered. But if you've already got a trucking model, as Ramelius has shown, there's a lot can be made out of that. Ramelius was in that district, albeit far further north than Forestania. They had or still have Edna May, which is in mothballs. But in between closing it and trying to sell it and not selling it, and then buying Spartan, and then wondering what to do with Edna May, all of a sudden, I suspect that a lot of stuff around Edna May has become profitable again. So maybe they'll turn it on. You never know.
Yeah, the hardest thing in that region's fucking native title, like the greenies in that sort of Edna May, Marta sort of area, like up that area. I know that's a bit challenging up that way. What do you take of? You got Alkane on the register. I think there's 7% as a strategic. Obviously an East Coast company. Pretty sure I've got an inkling. Mr. Bill Beeman's on their PA as well. I've got some wild theories, but it's
What's your wild theory, Matty? You can't say you got a wild theory and mention two names like that. And then
my wild theory, fucking have a listen to this. I know I piece things together and none of them, they get right eventually. I can see, hypothetically, if Bill was on the register, I can see that being an opportunity for Develop to obviously get the underground mining contract, and potentially it sort of fulfills the copper. It's only got a tiny bit, but it still fulfills the copper, even though it's a gold mine.
Oh, yeah, because how does it go? Gold's not green. I'm sorry, but it's not. Yeah. Quote unquote.
Yeah, we've forgotten about that. I haven't heard much green gold mentions of recent time. Hasn't that fucking died in the arse? The premium that Bellevue were wanting for their green gold, I think they're getting it in the premium on the gold price at the moment. So I think that's all wasted. So I can see that from Develop side. I can see Alkane, bit random. I can see where it pieces together is because I don't see Develop being a Western Australian company really much now. Besides, they got Sulphur Springs, Pioneer Dome, but you look at I spoke about it yesterday. I look at the attention there. They've obviously got Woodlawn. They're going over to Wahi for a contract. They've got a lot of people in the business that have worked a lot in Africa for Burncut offshore. I don't think they're wedding themselves to be just an Australian company or even just WA. Alkane's probably been, Alkane has ripped previously, but I see them as now that they've got Costerfield, there you go, you got antimony, there's a precious metal. Costerfield, Tomingley, and of just imagine if all that tied together, because Develop want places to put their underground gear and run contracts and run mines. Don't know.
Yeah,
but the fact Alkane by themselves, just not sure if they're going to have a swing at it or not, or why. And as I said before, why hasn't anyone swung already? What's everyone waiting for? Must be something.
Well, the asset sizes are quite complementary. I mean, it's not like Alkane's running a super pit and a Costerfield. The size of Medallion's project and the size of Alkane's other projects, other than Boda, all quite similar. So I would, and Woodlawn as well, all quite similar in terms of scale and complexity, the setting in terms of underground versus open pit, etc. So that would be complementary. Distal observation, I don't know the Alkane team very well. We've seen them pop up on a few registers. They were on the Genesis register way back, probably still are, but it wouldn't be a large percentage.
Yeah.
They were on the Calidus register way back, and I don't know if that's dodging a bullet or copping one in the teeth. They've been on the Medallion register, clearly. So it seems as if they've harboured intentions or desires in the past, and perhaps, maybe what they were waiting for was we can learn more about it, we can develop a relationship, and if there's a cheap opportunity, then perhaps that's when we launch. They then go off and blend themselves with Mandalay, which was a completely different character of deal. It probably changes the characteristic of the company and the way that they behave into the future as well, and there's digestion associated with that as well. So would they do something with anybody? It's probably further down the track yet for us to see, but I've always wondered about Develop, because being a miner, an owner, and a contractor, seems like a model which can get you started, but at some stage you're going to have to focus on which one of them you want to be, because it's probably going to be difficult to run those two businesses and have that much complexity under one ownership banner. Suspect one will give. So let's see.
Yeah, and I don't look. Bill being on the register, I don't think really means anything personally. He was on the Liontown register, he was on the Spartan register, and Develop didn't get either of those contracts. So whether it's just
he's on a lot of registers.
I'd say so.
That's not a wild theory.
No, not at all. So I'll be interested. How are you viewing these like Medallion specifically and Brightstar as well? And what else you got? They're the main ones in terms of the project development. They're
most advanced.
Yeah, that's the next stage. Are you thinking a transaction might happen? How do you think acquirers are looking at them now when because they don't want to pay a premium on cash, which they're going to have to do because they've both done capital raises. So you've got to pay a premium on what's sitting in their bank. How do you think the acquirers are looking at them?
It's hard to speak for acquirers because they all have perceptions in their own mind. But if you look at the pattern of acquisition, which we've seen in Western Australia, but you could argue it's across Australia because most of the projects are in WA, which means most of the transactions would be as well. It's either prior to development, so before the scale and approach can be fully cast and committed to, or it's in operation. So you're pulling things together and maybe doing mergers, in the way that Silver Lake and Red 5 had, each consolidated and eventually came together. It was kind of, semi-operating or operating assets all coming together and then being renovated under the one banner. Whereas Ramelius with Musgrave, Ramelius with Spartan, both pre-development. Karora with Westgold was obviously operating, but they tend to be either side of development. It's rare to see something which is being developed, which gets taken. So if you then look at them specifically, or even a selection of companies and look at their individual characteristics, something like a Medallion, it's got its scope and its approach absolutely set. If you're an acquirer, you'd probably want to see that all deployed, so that you don't have to wander in there and your DD cover off on what's spent, what's not, etc. If you apply that lens to a Brightstar, if you were going in wanting to be an acquirer of Brightstar, I don't think you'd be doing it for Laverton. Laverton is something which will transform the company, but the thing which will make them a target, in my mind, would be the ounces at Sandstone, which I think most of the gold industry has probably coveted one way or another for decades, but it was either not held by partners that you could transact with, it was partially held, or it was JV'd and, cross ownerships. It's in the simplest form of ownership it has ever been in now, and it's better understood. So I think that probably means that if anyone was, eyes on Brightstar, they might be inclined to act maybe at any time. I'm not
makes sense for Genesis, because they get Laverton and Sandstone, because Laverton can all go into Mount Morgans, but I think they only do. Old Ral doesn't do deals at the top. He only does good deals, which means whoever accepts the deal, it's a shit deal for them.
Well, and this is acquirer tendencies, right? I think every company says we don't want to be doing deals in hot markets, and we want to be doing deals on assets that have a good value proposition. That can mean so many things. Jake Klein at Evolution has been so disciplined in the way that company was built, but even when they were acquiring things, I think there was doubt in the market's mind as to whether or not they'd done something in a value sense. So you've got to. Some companies will say, we want to buy this in order to transform the scale of the company. This plus this makes something 1 + 1 = 3 or something like that. Other acquirers will go, we're not interested in 1 + 1 = anything. We're interested in where that all goes, and going into our mill is the consideration. So that's why we want to do it. And others will say, if all we're doing is buying ounces and continually making our business bigger, it doesn't matter where we are in terms of a price cycle or even the asset cycle. It just needs to make sense in an MPV sort of case. And, acquirers like Ramelius have been happy to pay for Spartan at a time that would have seen quite heady for gold, and we can only say with hindsight that it wasn't heady for gold because we've gone on so fast since in a short period of time. So I think it depends on who the likely acquirer is as well as to how they would approach some of these deals from a when do you do it perspective.
Fuck, Spartan would be, if that didn't get taken over, it'd be probably $4 or $5 now. The share price. If you
don't mention it to Simon.
I won't have to. Trust me.